My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to teach. So call me, 1-800-743-CNBC, or tweet me at Jim Cramer. How the heck can the Federal Reserve cut interest rates or even contemplate it when the market's still at such elevated levels? Now, we've had such an incredible run this week, even if today was a bit of a dud. Dow dipping 34 points, S&P inching down 0.13%, NASDAQ climbing 0.24%. I mean, the Fed is supposed to cut rates when the economy's in trouble, right? How could the economy be in trouble if the S&P 500 briefly made a new all-time high today? I hear a lot of people saying this, but it's based on a serious misapprehension, usually by people who don't really understand the stock market itself, because it's a market of stocks. See, it's no longer a good gauge. The actual indices aren't even a good gauge of the actual economy. The recent rally tells us that lots of companies are doing well for a variety of reasons. Some are doing well because of lower interest rates in the Treasury market. Some are doing well because we still have a strong consumer because of employment. Also, there's been some fast-growing tech stocks that have not been constrained by the economy. And pharma. Well, pharma and fast-growing tech, they tend to thrive in a weak economy. More importantly, I think we're looking at this very backwards. The market roared to these levels because Wall Street thinks there's going to be a rate cut. We'd be much lower if Fed Chief Jay Powell told us that it was still on the table, that there wasn't going to be any change. And if he talked about a rate increase, well, we would just be down huge. At the end of the day, the Fed is looking at the whole business world, and they recognize that everything from big projects to hiring itself might be put on hold because executives are freaked out by the president's tariffs. They are really starting to have a very chilling effect, even if they don't want to admit it in the White House. Both the current ones and the ones that might be added in the future are very important to how business people make decisions. See, Jay Powell isn't being reckless at all. He's being prudent. When you see major indicators like rail car loadings, okay, boxes, chemicals, steel, lending coming down, these are early signs of what could happen, prelude to a recession, or at least a slowdown. Powell doesn't want that. He wants to prevent it. Remember, he didn't commit to cutting rates next month, right? All he did was to say he's monitoring the situation. I think Powell's trying to get ahead of the slowdown. But he's not going to pull the trigger until he sees the employment numbers for June and whatever the president does next on trade at the G-20 meeting, which is staring us right in the face. Now, that's as good a place as any to start with our game plan for the next week. On Monday, I'm looking for two things that might happen over the weekend. I want some preview of the president's trade talks with China, especially since I expect another 10% tariff proposal on the remaining $300 billion worth of goods we buy from the Chinese, possibly even before the G20. Remember, it's a proposal. And I'm hoping the White House will come up with a more proportionate response to Iran shooting down that drone, because the first idea sounded pretty darn draconian, even for this president. Both of these events could be negative for the market, perhaps very negative. And stocks simply aren't set up for that negativity here. In fact, if anything, we're overbought and we are due for a pullback classically. Remember I told you about the proprietary oscillator I get from the Standard & Poor's company, the one that helped us call the bottom a few weeks ago? Well, it breached 6 yesterday. It's come down a little bit today, but it breached 6 on the positive, which tells me you got to do some selling. That's why we've been raising cash seemingly endlessly for my charitable trust, which you can follow along by joining the ActionAlertsPlus.com club. Tuesday, what I call a fulcrum day. Why? Because we hear from the leaders of 3 different industries. We hear from Lennar for housing. We hear from FedEx for obviously just commerce, okay, transportation commerce. And we hear Micron, gigantic semiconductor company. If you want to know why the Fed's taking a more dovish approach here, well, just listen to these 3 conference calls. It's going to tell you everything you need to know. Lennar didn't exactly have a glowing report last time. Remember, it's the largest home builder. But this quarter, it has the benefit of lower mortgage rates. If we get an upside surprise, that's one less reason for the Fed to cut. But I don't know if we're going to get one. I think FedEx will tell the tale of a slowdown thanks to the international shipping business and tariffs. Our companies that sell merchandise overseas have had a hard time lately. FedEx knows how to frame that weakness for us. Remember, Fred Smith, the CEO, is an economist. He's also the founder. How about Micron? Well, this commodity chip maker has been slammed by a series of downgrades and price targets all week. The problem, Micron misjudged the level of demand. They thought it would start to exceed the supply for their basic chips as soon as the second half of this year, which is kind of now upon us. And they thought the price would recover. Instead, prices keep going down. Now, that means the estimates are too high when they report. Sometimes I think Micron represents a bargain because it's trading at 5 times earnings. But a low multiple like that, that's a big neon sign that says earnings are going to collapse. Sometimes it doesn't happen. Most times it does. Wednesday, we get results from General Mills. If you remember the last quarter, they had a very nice upside surprise. It was in large part because of Blue Buffalo dog food. A lot of people felt they paid too much. But you know who doesn't feel that way? Marley and NVIDIA, their favorite. I think this stock already reflects a lot of positivity, though. It's currently within spitting distance, 52-week high, up almost 40% for the year. No. You know what? If I'm going to buy new high stocks, I'm going to buy Mondelez. We had them on recently. And PepsiCo. I want them on recently. And those are a pair of snacking plays. Why? Because millennials have a predilection to eat 7 times a day. Do they do anything that I do? Is there any, even a smidgen of commonality? Breathing. We both breathe. Millennials, we both breathe. Okay, on Thursday, we hear from these companies that lots of people want to bet against. Walgreens, McCormick, Nike. I get the bear case on Walgreens. Amazon's killing them on the commodities up front. Their regulatory agencies galore looking into the pricing for pharmacy and back. How bad is Walgreens? I'd rather actually have you own CVS. Another halls of pain if you insist on buying a drugstore. How about McCormick, the spice kingpin? Well, that's interesting. They've got this line, you know, that's red hot, ha ha. 7% of its float has been sold short, which I think is way too high. Just kidding. McCormick's got a good track record. I expect a good quarter. I think it can go higher. They're non-promotional about them. I didn't know that I made my own cayenne pepper sauce. I should serve this at Bar San Miguel, my small plate Mexican restaurant that is in Carroll Gardens. Never mind. As for Nike, I keep hearing that they're going to have a shortfall. Why? Well, because of China. But Nike has a better relationship with the Chinese Communist Party than any other American company. That said, I don't like the risk reward here after the stock's recent run. I liked it when it was at 80. On Friday, STC, Constellation Brands, reports this is the company that's parent of Corona and Modelo. It needs to tell us a tale of strong beer demand. Unfortunately, it's been raining a lot. I can tell you from being in the tavern business, raining makes it just hurts beer sales. I'm concerned that the stock might take another clubbing like last time. Plus, after last night's shortfall from Canopy Growth, the cannabis company that Constellation owns a big chunk of, some investors are questioning that investment. I say it's too early. From there, we're off to the G-20, where President Trump will meet with his great friend, President Xi, and hopefully they'll hammer out something. But remember, hope should never be part of your equation. I'm not optimistic here. We've seen this before. It didn't accomplish anything. The president thought he was had. I think people could be disappointed. The bottom line, we had a great run this week. It last 3 weeks. But the market's down overbought territory, and there are a bunch of potentially negative catalysts. That's why I think it pays to be a little cautious. Wait for more days like today if you want to do some buying, that especially that nasty last half hour, which was a full-scale markdown of every high-flying stock, including the IPOs, in this market. Steve in New Jersey. Steve.
Jim, big booyah from New Jersey, Vice Life. How's it going?
Pretty good. How about you?
Pretty good. Look, time is money, so I want to make this short and sweet. AMD and Lisa Sue's got me real excited. Sue-Bay's got me real excited, maybe except for Goldman and UBS, but that's a different segment. Trump and Xi in Osaka. How much has the market priced in the deal? And if it goes through, is AMD going to make the shorts' heads explode?
My head just exploded from Steve's question. I like Advanced Micro. It's marking time between the 28 and 32 level. People are worried that there's a glut of semiconductors and it's going to extend to AMD. I don't think it will. I think Lisa Su will navigate her way through this. It's a great long-term position. I need to go to Wendy in Nevada. Wendy.
Hey, Cramer.
Yeah.
So you talk a lot about these companies that just hit the market like CrowdStrike and Beyond Meat, but nothing about
I try to keep people
Fiverr.
current on these. I'm sorry, go ahead.
Yeah, but nothing about Fiverr anymore.
You know why? Because I'm not a fan of Fiverr. I didn't think it was special enough. Logo, poster, brochure. I just don't think it. I think it snuck in there in between a bunch of others, and I just don't think it's special enough. So I did not elect. Remember, I liked Revolve. That got killed today. Oh my God, we're going back to Steve in New Jersey. We're taking him again. Steve. I think we should go to somewhere else. I think we should go to a whole different state. Hello? I think we go to Joe.
This is Joe from North Carolina.
That's what I was hoping for. You know, I'm done with Jersey for the day. Joe, what's up?
Hey, Mr. Cramer. Thank you for your time. Real quick, I see Verizon, ticker symbol VZ, America's best reliable network, now 5G, helping consumers in many ways. Number one, the struggling education system in the U.S. maybe using AI to educate students that understand better, while teachers can focus on the lesser understood.
Right.
And number two, in healthcare, where the technology can pinpoint health issues more accurately than the human eye can. And
Right. Well, you're a buyer of that pure. Let me just say that Verizon is the stock that I've been recommending since the show began. I think it's an incredibly well-run company. It is a core holding for a lot of people, and I agree with that idea. It is a stock that I can recommend, and when I see you on the street, you're going to say, hey, you know what? Thank you very much, Jim Cramer. All right, I am taking a cautious stand into next week. We've been up a lot. The market's overbought. Let it come down. I suggest you do the same. Hey, on Mad Money tonight, dude, you're getting Dell at a discount, but does that mean it's worth buying? I'm eyeing the company after its pause. Then, an unlikely retailer that's firing on all cylinders. Find out if it's time to take a ride. And after a tough day for the cannabis cohort, I'm eyeing a name that could be worth considering once the dust settles. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.